Okay, peeps, welcome back. So today we're going to be going over the grayscale trusts, and we're also going to talk about some news events. So with that being said, let's get it. All right, so the first thing I want to show you guys here is that the markets did unfortunately have quite a bit of a sell-off today. As you guys can see on the S&P, it unfortunately did tank quite a bit. I think the reaction by the markets was a little bit overblown, if you ask me, because I do take a look at a lot of different market metrics, a lot of different news catalysts, stuff like that. And I think the markets are doing what the markets always do. They just overreact, and I think it's kind of being blown out of proportion, as it always is. Because as you guys know, the markets are very irrational. They tend to swing extreme in one direction or another, or at least it seems to be the case lately. So I want to go over the big news catalyst today. There is going to be some more news catalysts coming up throughout the week. I'm not sure that we're necessarily going to talk about this one, or the upcoming catalyst, I should say, but I think this one is pretty important. So basically, it's the ISM manufacturing new orders. As you guys can see, that was released at 7 a.m. today. I'm not sure what time zone that would be on. But regardless, we just take a brief look at it. It says manufacturing ISM report on business is based on data compiled from purchasing and supply executives nationwide. Yada, yada, yada. We can talk about kind of everything in between, but basically, the gist of what we're looking for here is right down here. So it says a PMI rating above 50% indicates that the manufacturing economy is generally expanding, and below 50% indicates that it is generally declining. So what do I think about this? Well, I think it's just fluctuating, if I'm being completely honest. I mean, when we think about seasonality, right? People's kids are generally coming back, or I should say, going back to school. So for the entire summertime, and again, I know this doesn't apply to all companies, but for the entire summertime, generally speaking, a lot of these kids are going to be out of school on summer vacation, right? At least I'm remembering the days of going to school. That was a long time ago for me, but regardless, during that time frame, parents are probably not buying as many school supplies until they eventually get to about the time that their kids have to go back to school, right? So you would usually buy things like clothes and school supplies, art supplies, stuff like that for your kids. Maybe a new cell phone if that's what you think your kids need. So in my opinion, again, I don't really know this particular metric in depth, but in my opinion, manufacturing is what it is. You're creating stuff, right? So just based on that, I would say that likely it's probably just a laggard, I should say, and likely we'll probably see this thing increase by December. I could be wrong about that, but that's kind of how I see this. Now, in terms of it being below 50%, we would have to look more in depth into this. But in my opinion, I don't really see any outliers stating that this thing is really all that tumultuous, if I'm being completely honest. I mean, look, last month we had it come under expectations. The month prior to that, it came in slightly above expectations. Before that, it was even worse than it is this month. Okay. You can see this thing kind of fluctuates, right? So, like I said, I think that, and basically, according to this, we've been under that 50 zone for quite a while. As you guys can see, we're kind of fluctuating above and below it. So, based on seeing all this, I don't think it's really all that extreme. The other thing is companies' business volume in a lot of industries, maybe not all industries, but a lot of industries generally do kind of slow down between I'd say about the midpoint of August, probably going into roughly I'd say about the middle of October. Reason being is because you don't really have a lot of major holidays in there. Okay. Towards the end of the year, we get things like Halloween, which I don't really consider a holiday, but some people do. Thanksgiving, Christmas, and New Year's Day, right? So we get all those different holidays, plus you have going through January New Year's resolutions. So basically what I'm saying by saying all this is I think that the data was overblown. I think the markets overreacted to this and freaked out for nothing. And it's interesting because we actually put on a lot of larger size call debit spreads today, but not all of the expirations, but a lot of the expirations are actually further outdated towards the end of the year, kind of moving into that bullish seasonality because, again, we're basically trying to hedge our bets here and say, okay, if for whatever reason September is bearish, we don't want to get caught off guard and then the positions go against us. So we'll put the expirations further out in time to ensure that we get that end of year rally and we can still profit off of that. Okay. But basically, I think this is overblown. We may possibly have a double dip in September. I don't think it's going to be all that bad. And I do think the markets will be heading for new all-time highs by the end of the year. I just simply think that's going to happen because, again, there's too many bullish things happening. I mean, we have the elections. We have the end of year bullish seasonality. Okay, we have the Bitcoin halving. We have the end of year crypto rally. Generally speaking, stocks and crypto rally right around that October to December timeframe. People are looking forward to the new year. I mean, the Fed rate cuts, we got all these things. So anyways, with that being said, let's go ahead and get into the grayscale trusts. So I'm going to remove the Bollinger Bands here, and I'm going to put on the 51 EMA. Whoops, not 52. Sorry about that. So 51 EMA. Again, usually have this highlighted in red. So we're going to go down here to the grayscale trusts and take a look at these. Okay, so same thing as before. I mean, LTCN is just kind of sitting on this trend line. Could it break below it? Sure, but I can't tell you guys for sure one way or another. I think it's going to. And even if I say, hey, it's likely to probably hold this level or it could go lower or go higher, guys, don't hang on my word for this. Okay, markets can change on a dime. I could be right. I could be wrong. I can't say anything for certain. Okay, I'm just telling you what I think the likely scenario is. Please do not make any financial decisions based on what I say. So support down here is $6.50 to $8 at support. I do think there's a chance this could hold. So I'd be looking probably for resistance at 15 and then up here at 25 to 27. And like I said before, I think these probably are not going to go higher until probably the end of the year or maybe the start of next year. It depends on which trust we're talking about here. So 54 up there at the swing highs. Give you guys the measured moves here. We're looking at about 111%, 129%, and then roughly about 365% respectively. And the reason I say that I think, and we've talked about this in previous videos, the reason why I say that I think these are not likely to go higher until the end of the year is because generally September is usually bearish for Bitcoin, even sometimes during the halving years. Okay, it's just generally a very bearish month. I thought because of the flash crash, we weren't going to get any more pullbacks. But the month has just started. Okay, we just had a holiday, so we'll have to wait and see. But I do think likely Bitcoin and crypto is going to go up to the end of the year or through the end of the year. I think when Bitcoin goes to all-time highs, LTCN and BCHG will go with it. And then when we get that big alt season that we've been talking about for eons, the rest of these will likely go up with it. That's what I think is going to happen. Can't guarantee it's going to happen, but that's what I think is going to happen. So BCHG sitting right here at support. I'd be looking for anywhere from $5.70 to about $7 as potential support. 1030 to roughly about 1260 here at resistance, and then you have 18 to I'd say about 18 to 20, and then roughly about $24 or so. So measured moves here to get to the top of these zones: 111%, 232%, and roughly about 293%. Okay, HZEN. So this thing is still sitting kind of on that support zone. We'll have to see if this thing holds. I mean, until Bitcoin makes its new peak, whatever that's going to be, 100,000, 150,000, 200,000, we don't know. And then we kind of have suspicions of what we think it is, but we don't know. We can't tell you the exact dollar amount of what Bitcoin will top out at. But, when we get the Bitcoin dominance falling, that's when all should pop off. And until then, I think there's a chance, at least until Bitcoin goes to new all-time highs, that anything altcoin related could potentially continue to bleed until we see Bitcoin start breaking all-time highs. But I think that'll be relatively short-lived. Again, that's just my opinion, but I think likely Bitcoin's going to start pushing for all-time highs somewhere around the election time. So support here, $2.50 to $3, resistance $3.80 to about $4.20 there. $6.90 to $8 at the upper bound up there, and then roughly about 10.5, which again is the target for the wedge, is the top of the wedge. So we're looking at roughly about 57%, 207%, and 296% respectively. ETCG, this thing is literally sitting right on the edge here of potentially breaking the support. We'll have to wait and see. So $8.50 to $10 at support. Lower level here, $2.80 to roughly about $5. I'm just gonna skip this upper resistance. You guys can, you already know what it is. We talk about this countless times on the channel. So 13 to about 15, and then you have about 1760 to 20 up there. I'm just going to measure the top zone here because, again, this bottom zone wouldn't really be all that big of a move. So top zone here would be roughly about 131%. ETH, so big, huge cup and handle pattern. Again, the cup and handle target is all the way up at the previous peak up there at 46. And I mean, yeah, there's still a gap here that needs to be filled. This is roughly about 22 to 25, somewhere in there. So support I'm looking at right here is roughly about 1870, resistance 2320 to about 2820, and then of course you have that 46 up there at the cup and handle target. So if it gets back down to this level down here, you'd be looking at roughly about 50% and 143% respectively. Phil G, shockingly, was the only green trust on the day. Yeah, literally the only green one, which is kind of weird. But for whatever reason, it had a nice little pop, so we are kind of still sitting right at the bottom of the support. Whether it holds or not remains to be seen. So 37 to 41 up there at the support. Of course, we need to get above the EMAs. Okay, that needs to happen in order for this thing to start turning bullish. And then 400 would be the all-time high up there. So, I mean, even at current prices, you're still looking at roughly a 10x. So 919% move here. And again, you know, I can't tell you guys what to do, but, you know, the old saying in finance goes that never invest more than you can afford to lose. Never put all your eggs into one basket. But again, of course, it's your guys' money, your guys' life. You can do what you want with that. So support here, 450 to about 520 at support. Resistance, roughly about 790 to $10 at resistance. And then 32 is up there at the highs. So just from the current level, roughly about 102 to 537%. And I don't want anybody to take what I'm saying out of context. When I say it's your money, you can do what you want with it. I'm just saying, like, in terms of the financial industry, I'm not insinuating anything or trying to say anything outside of that. Okay, this is just for finance only. So support here, roughly about 12 to $15 at that support. Again, we got to get above the EMAs. So $80 all the way up here at the highs. I mean, this is a pretty straightforward chart. It's not really all that complicated. So 476% move here. G-Link sitting right on support, which again, support is roughly about 37 to, I'd say, 45. And then you have roughly about that 65 to 85 above head on resistance, and then 220 all the way up there at the highs. So the measure move here, roughly about 114% to 465% move. GSOL, once again, this thing is kind of starting to slowly bleed. I mean, it has kind of pushed down with the markets. That doesn't really surprise me. But again, you know, I mean, typically this would be bearish seasonality on a year-by-year basis. September usually is the worst month for crypto and stocks. I'll show you guys that at the end of the video so you can see what I'm talking about. But anyways, it did get below this trend line. Whether it stays below there or not remains to be seen. So support here, 300 to 350, roughly about. If it comes back up to this line, it kind of bleeds down like it possibly could. It could be anywhere from 370 to roughly about 250 going into the end of the year. So all-time highs up there at roughly about 580. If it gets to the bottom of the zone, you'd be looking at roughly about a 94% move. If it kind of bleeds into this trend line, which would be a bit odd, but it could happen, roughly about 130% move. GXLM, so we did get a close last week below this line. The current line that we're looking at here is roughly about 1450. I would not be looking at these white lines as targets. You guys can if you want to, though. It's roughly about 21 and 2430. I'd be looking at this zone right here. So 53-ish to about 58, and then the swing high up there is at 70. So I'm just going to measure as if it were going to get down to this white line. Which it may or may not. You'd be looking at roughly about 289% and 358% respectively. Mana, so this thing's kind of still trudging around this white line here. It has kind of gotten below it. If I actually move this down, you guys can see that it attaches to the wicks here. It's kind of maybe not perfect, but it's kind of sitting almost right on that line. So again, that line's going to be about $10. Support below that 150 to 335. Again, I don't think it goes that low unless for whatever reason when the Fed cuts rates, the markets have some kind of steep sell-off, which is possible. I mean, it's supported historically. But again, I just don't see that happening this year. I mean, this year of all years, I just can't see that happening. It doesn't make any sense. It looks really bad for politicians and for the Fed and stuff like that. And the last thing that the government wants is for the Fed to lose credibility because people's trust in the U.S. dollar depends on a lot more than people realize, including their status as the world reserve primary currency, which could be threatened for them to potentially lose it to other countries, which means everybody in the world would have to use a different currency outside of the U.S. dollar. I don't think the United States wants that. So it would be kind of a stupid move for them to allow a market crash this year or even next year. It doesn't matter. So from the current level here to the highs, roughly about 568% gain. Zcash, so we don't have a weekly close below this yet, but it is below the support. So I'd be looking at the white line as of right now, 320 at support. You guys can, of course, look at this level if you want to. So 440 to 510. I'm just going to throw it out there in case you guys want to know what it is. So $8 to 960 here at resistance. And then 10 and a quarter up there at the highs. If we do get a pullback into this zone, you'd be looking at roughly about 60%, 205%, and 230% respectively. Now I'm going to go ahead and show you guys what I mean by bearish seasonality. And yes, it was a pretty bloody day in the markets. Unfortunately, it was kind of a real crap show. You can see the yield curve is almost inverting too. But again, we're going to talk about macroeconomics a little bit later in this video. So I did show you guys on the monthly that we had a bullish, extremely bullish hammer candle, okay? I showed you guys this on X. If you have not followed us on X, I suggest you do so because you can get the chance to get this in far less time than you would otherwise here. But that's entirely up to you guys. So very bullish hammer candle here, okay? Usually, whether this is at the top of a move or the bottom of a move, it doesn't really matter. It's usually very bullish, okay? I mean, if this was a red candle, I'd be like, okay, yikes, maybe we see a reversal, but it wasn't a red candle. It was a green candle. So we got a red one back here. You guys can see it did actually pull back. Interestingly enough, it pulled back right around September, right? August, September, October. We saw some weakness last month, but again, that was based on the flash crash. So maybe a pullback through September is in order, but we'll just have to wait and see on that one. I'm still not fully convinced at this point that's what's going to happen this month. But if it did happen, it would not be out of the context of history. So September so far, looking a little bit red if we go back here. And again, this is what I mean by bearish seasonality, okay? So we'll go back a little bit further. You guys can see it did actually start a little bit earlier in the year last year, but September, what happened in September? Well, the markets were mostly down and sideways through October. If I go back through again, to let's see if I can find it, September of 2022, you can see this was the bottom of the bear market back here. When I zoom out, it'll be more obvious, but September 2022 was generally bearish, okay? And again, here in August 21, bearish. And if I go back even further here, you guys can see it wasn't perfectly timed here, but part of September was bearish in 2020, and then in 2020 it also went up into October. So the timing for the bearish seasonality there was a little off. Again, it's not going to be perfect every time, but generally speaking, somewhere around September usually does have a pullback. And again, you guys can see right here at the bottom of the bear market lows on the S&P 500, that's pretty much right about the end of the lows we got at that 2022 bearish seasonality. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.